Good evening, students. Today we are starting the first unit of our syllabus, financial reporting. In financial reporting, first understand the basic concept, purpose, scope of a financial statement. In today's discussion, we are going to understand about the use of financial statements, the different types of financial statement, and understand how and what information these statements are going to give. So let's continue. What are financial statement? Now, financial statement is a document. It's a structured format information which makes you understand what are your financial income, expenditure, reasons, purposes, and other things. So, in short, a financial statement is an evaluation or analysis where I'm just checking out how much, when, where the things are working out. So the financial statement is basically helping me to understand gains, losses, incomes, expenditure, and in the last, the clear picture about my financial activity. Now, when I talk about financial statement, it is summarized way of elaborating the different entities, investments, sales, purchase, and other things to help to take a decision, to predict about financial position, to enhance the investors about understanding the financial capacity of the concerned organization or the person for which we are sharing the financial statements. So in short, financial statement is summarized presentation about how I'm doing good or bad and what are my terminologies about same. Why financial statements are important? Now, if I'm selling and purchasing the things, if I'm not following a systematic record, then I cannot ascertain the profits. Let me give you an example. I'll change my color. Suppose this is one page where I'm writing my all the expenses and other details. So I write X give me 200 rupees. I pay Y 30 rupees. A gift me 250 rupees. B ask money of 20 rupees. C's tuition fee paid 150 rupees and so forth. So if I just see the statement and I want to understand how much is my profit, how much is my loss, at a glance, I'm not able to understand whether I'm in profits, I'm in loss, or anything is happening to my financial post. So considering to this, a financial statement helps me to understand how I'm progressing. It helps me to recognize how my growth is done. It elaborates that when I'm dealing with the different entities, different people, they should able to understand my financial position. So, in short, a financial statement is helpful for communicating my financial position, expressing the capacity, the benchmark, the goodwill, and financial strength of my company. It provides sometimes as a tool to highlight the success of organization. It is one of the way which act like a brochure when I'm attracting the different investments in my firm. So overall, a financial statement is summarized pattern, summarized way where I'm getting the information about a company, investors understanding security of their investments, workers understand the company's financial feasibility, suppliers or buyers they understand the company's turnover. So this way, a financial statement is an active role playing things which helps the businesses to grow faster, analyze, and eventually understand the capacity. Now, what is scope of financial statements? I'll take a pause of 1 minute. Please go through the slide. Now, if we just check, the scope of financial statement totally depends upon the users of financial statement. If it is data, the scope will change. If it is creator, the scope will change. If it is student, the scope will change, and so forth and so on. So the scope of a financial statement changes on basis of its application. So the first scope of financial statement is it helps to understand the financial soundness of a company, where I'm able to recognize how the funds are going out, how the funds are coming in, how the funds are positioned, and what are the different holding of assets and liabilities I'm having. So, in shorter way, I can say, in nutshell, if I want to find out the person with whom I'm doing a business, I'm lending a money, whether he is in profits, he is making losses, or whether I have assurity about his financial soundness is interpreted by a financial statement. The financial statement includes the various accounts like income and expenditure, trading account, profit and loss account, balance sheet, and cash flow and fund flow. So the scope of financial statement is very wide. It's not a particular only balance sheet, but it consists of other things and its annexures where the data, where the inputs about different data is shown. The financial statement is a basic benchmark for performance evaluation because I can just compare what happened in 2000 and what is happening in 2016. So if I compare the output, I can talk about whether I'm progressing, whether I'm declining, or I'm making any other profits. So in short, it helps me for my decision making. It helps me to understand my performance. It helps me to recognize whether my business is performing as per standards or I'm lacking somewhere else. So by using the financial statement, one can derive the success and one can define the achievement or recognition of contribution of any individual. Many times, the financial statement provides an historical information or current information which enables effective decision making and which facilitate growth and negotiation factors. So if I'm talking about the trade union bargain about the salaries, I can easily deal with. by understanding the growth, by understanding the other things, because in financial statement, I can recognize what is my loss, what is my gain, and what are the sources. So I can target the key sectors and I can ignore my unproductive sectors. So this way, the financial statement will define where I should go for or where I should not. To give an example, suppose in balance sheet, I'll change the color. This is my balance sheet. It is divided in two ways. One, it is asset, and second, it is divided as a liability. In assets, suppose the fixed assets are 80%, current assets are 10%, and intangible assets are 10%. I talk about capital. The capital is 90% and other liability is only 10%. So if I see the company's balance sheet, I can understand this company is dominated by a single owner because they having much larger portion of capital, whereas other liability is hardly 10%. If I go to asset side, more investment is done in fixed asset, whereas the current assets are managed well, they are short. So I can talk the owner is a traditional accountant. He is only following traditional method of writing and hence they are only able to generate the profits. But about the financial efficiency, the people are not yet able to comment upon. So here I can analyze the company is having large capital, large growth, but they are not successful as they are not able to achieve the corresponding financial targets. So by evaluating the performance, I can just decide how and which sector I should talk about or dominate. So when I talk about the scope, I am always talking about the application, the use, and the benefit of financial statement. Any doubt so far? If doubt, put in chat box. Otherwise, I'll move forward. Let's move further. What are types of financial statements? Now, as I said earlier, the financial statement is being categorized in different domains. The first financial statement is statement of a multinational company, where I have balance sheet, trading account, P&L, and annexures supporting to it. When I say financial accounts of a cooperative firm, I'm talking about the income, expenditure, and so on. So let me just illustrate this using Excel. So when I say it is MNC company, I have balance sheet, P and L account, trading account, and disclosures. When I talk about cooperative firm, I have income, expenses account, and I have balance sheet. When I talk about partnership firm, then I may have P&L account, balance sheet, and trading account. If it is small, then I can have income expenditure and balance sheet for sale. If it is a charitable trust, then it normally non-profit making. So it is having income expenditure and a balance sheet. If it is a cooperative, if it is MNC, if it is a partnership, if it is charitable trust, everywhere, what common thing you is finding is nothing but you have a balance sheet. So ultimately, whatever the system I follow, I need to have the balance sheet. What changes in sometimes that instead of income, I'm making P&L and L and trading account. So when I'm dealing with a trading firm, when the production activity are going on, the more and more dealing is done about income and expenditure, whereas most of the time, profit and loss account and trading account, they are considered to be part of final accounts. Now, cash flow, fund flow, and different annexures, they are not considered as core part of your balance sheet or sorry, your core part of financial statements. They are recognized as complementary parts, and in that case, these these all are being considered as combined part of my financial statement. So, financial statement is a summarized statement combining of one or more accounts which states the financial position and consolidated indication about how the firm or sector or industry or a nation is performing. Now, I purposely skip some part. I'll come back to that later. What is notes to a financial statement? A financial statement is a statement of trading P&L, etc. But there are certain annexures, certain information which is shared about the financial statement. The first is called accounting policies. The accounting policy disclosures are always displayed in a financial statement. Policy is a benchmark or a rule which I follow and I utilize while performing certain act. It can be writing books of accounts, it can be maintaining accounts, it can be explaining the things. So accounting policies are basis of preparation which declares what I'm going to do and I'm going to follow. For example, if I'm going to follow income and expenditure, or if I'm going to follow profit and loss and trading account, that all things are being defined or described in accounting policies. Most important, what is the rate of dividend? What is type of depreciation? Whether it is reducing balance or it's a fixed income depreciation. This I need to decide before finalizing my account writing because once I decide to go with my account writing and ultimately I'm not able to provide a justification, I'm not able to provide solution about my accounting, then this account writing may become a chaos. How? For example, I follow a fixed method of depreciation for 5 years. So the asset which was 2000 is become zero after 5 years because the life was 4 years. But when I go with the reducing balance method, it will take more than 5 years, at least 2 months, because it's a reducing balance method. So which method I follow? What is rate of depreciation? What is rate of appreciation? What is the rate of reserve for doubtful debts? So all these things are mentioned in accounting policies. And accounting policy disclosure is very crucial for any financial statement. The second thing, the contingency adjustments. Now, what is the contingency? Contingency indicates the sudden or the occurrence of event because of some other things. For example, you will not carry the umbrella when it's cold. You will carry the sweaters. But unfortunately, in winter, there is a heavy rain. And if you don't have a sweater or warm clothes, you need to get adjustment your side. So you stand in the shades, wait till the rain is over. But if you are seen in newspaper or television that there is going to be rain, you are prepared for the rain, then you are well analyze the situation and you have find out solution for same. So if the organization has set back any contingency or meet with any potential large threat in terms of financials, they need to have a they need to have contingency disclosures as a part of their final accounts. And last but the key, the assumptions, the estimation principles, and the basic philosophy followed need to be analyzed and presented while writing the financial statement. Suppose I'm writing financial statement of Pepsi and I write it income and expenditure. Logically, income and expenditure is for non-productive or socio-economic organizations. If I do it for MNC companies, the recognition of that statement is become complicated across the globes. So if my company is German, Deutsch, France, Australia, or so on, I need to be interpretations in local language so that the people will understand the numbers, people will understand the progress, and no hidden notes are required to support the financial statements. So when I'm writing a financial statement, I need to be humble, I need to think, I need to summarize, and I need to conclude. Why I'm saying this? Because when you're writing a financial statement, you are summarizing the future, you are summarizing the success, you are summarizing the efforts and achievements in a particular statement format. If you're having a grudges and aggression or a dispute, in all these concerns, your report writing will not be qualitative. It will do as a quantitative, but about the outputs, the productivity, and show, this will not work great. So, in all these cases, the account writing is need to be followed in a such a way that you are following the principles and you don't have any vested interest in mentioning the numbers. If I have vested interest and I want to just increase the profit to make its good picture, but actually the profits are not good. So in that case, my purpose of account writing will not be there. Second expression you required about account writing is thinking. In accounts, we have error of omission, commission, and principal. So all these are the behavioral aspects of the person. who is doing the account writing task. If he is knowledgeable, if he is expert, if he is experienced, he can write the accounts in well and sound manner. But if he is new person, he didn't understand the process. He do not try to recognize the steps to complete an particular transaction. It's vouching, it's noting, and so on. Then the scope and application of financial statement becomes very limited because even the data is available, I'm not able to interpret the results of that data. While writing the financial statement, I need to summarize and conclude the growth, the progress always. Because the statement I cannot convict that it is consist of minor detail. What I will do is suppose in a year there are 5 to 10 transactions about building. I can have combined transactions or I can have 2 or 3 transactions that I purchased building, I sold the building, I renewed the building, I reconstruct the building. So some instead of 10 different transactions, I can summarize in a particular way and I have to conclude in proper format so that the other person who's reading the report, they should understand about financial position of that particular entity. There is some error in PPT, so I'll just so this was a future and scope of financial economics. Now let's move ahead. Let's understand who all are the users of financial statement. Any guesses who are the users of financial statement? Any guesses? The users of financial statement are very similar towards the users which are operating in the different markets. So let me share the other PPT and we'll discuss the users of financial statement. Accounting is service activity. It's a function to provide the quality information, primary financial in nature, but economics entities that is intended to be useful in making economic decisions. I'll wait for 2 minutes. Please read the concept called accounting. So, as per this, accounting is service activity. It provides qualitative information. It is an economic entity and useful in making decisions. So, a financial statement, when it's doing account writing, we again recognize it as the function or the activity performed to summarize the financial growth, achievements, and all these things in a particular way. So when you're talking about a financial statement, we are always talking about the qualitative representation of financial data, which is in quantified but a structured format. So let's move further. There are two types of users who use the accounting information. One is external and second is internal. Please read the slide. Now let's go by two types. Now this categorization of users, that is internal user and external users, they are categorized based on dependency or linkages. When I'm quoting the users which are the internal users, the internal users means the people who are working in the company. Suppose this is my organization. If the persons are working in my company, they are called as internal users. But it is supplier, it is purchaser, it is government, it is society. So all these people are not directly performing in that company and they are recognized as external users of accounting information. The first and foremost users are managers for decision making, officers for controlling and implementation of plans, sales staff for target making and using the tools to enhance and motivate team players for maximization of sale and any catchment of products. Employees use the information of accounting for their salary negotiations and so on. And in the last, internal auditors use the accounting information to analyze the frauds, to analyze the performance, and to cross check the growth happen. So most of the internal users they use the accounting information for decision making, for controlling, for regulating, for planning, and implementing these plans successfully. Whereas if I just check an opposite side, that is the external users, these are the users who are interested about their money protected in the company. For example, the lenders are the people who give the money either for working capital, operating capital, or fixed capital. So, as a lender, it is my interest to check my money is secured, to check the progress is happening, to check whether the money given and the purpose or the application they match to each other. So, in short, the external users are securing their interest in a company, whereas internal users they are protecting their rights and demanding the compensation for their efforts in success of the given organization. So when I classified based on interrelations, these two users are the major importance. Now, if you just compare the investors, lenders, they are protecting their money and they are basically interested about solvency and payout ratio. Whereas government, consumers, and customers, they are interested about the pricing strategy, the pricing policy, which is performed or followed by that organization. The difference between external auditor and internal auditor is internal auditors are for fraud detections and for compliance of some regular norms, whereas external users are those auditors who are analyzing the account writing practices, the success of account writing, so forth and so on. I'll wait for 1 minute. Please go through the slide. So far, any doubt, you can post in chat box. I'll wait for 1 minute. Now let's move further. The internal users use the information for decision making, for policy implementation, for comparison, and in the last, to formulate the different procedural aspects and the techniques to counter check the frauds, counter check the achievements, and unleash the potential of company. So most of the time, the information used by internal users is called as management accounting, and they helps to provide the information for managerial use, that is application, controlling, budgeting, and directing the future scope, growth, and financial risk. Whereas the external users, they are protecting their funds. So in short, their interest is to ensure that the funds they are invested or the funds they are spent is protected. So these are called financial accounting. Now let's understand one by one. Who is the employee? Employee is the person who is working in the organization, who is basically in contract with the employer that I will perform so and so task, and employer will repay him certain amount as a compensation, or the employer might provide some services, some facilities which are counted in terms of monetary and they are added to the salary. So normally employees use the accounting information for wage pay fixation, for analyzing the profitability and performance indicators. They use the information for trade bargains, and they use the information to forecast the success and functioning of that trade body, because analyzing these functions will always help for preventive measures. And that's why it is very essential for employees. So, what are the things which employees are crucially checking in financial statements? The first, revenue or profit generated. How much dividend is declared? How much dividend is reserved? What is the categorization of my capital block? This all is analyzed, and based on WACC method, they will be interpreted about success or results of your project on working capital, your forecast about working capital, your planning about operational expenses, and so on. So when I do all these things, employee will understood if my progression is successive, that means today it is 10, it's 20, 30, 80, and 70. So I'm doing progressive. Then employees will be having information about growth of firm, and they can start bargaining about their proportion or their ratio in the profitability of business. Now let's talk about owners. I'll take a pause of 1 minute. Please read the slide. Now, here owner is an cumulative term. It is not considered as a single owner. It can be shareholders, it can be board of directors, it can be managing trustees, or so on. So ultimately, owners are the people who are operating the business. They are the people who are major contributing in a business. So when I'm running a business, I'm taking risk, I'm analyzing profits, I'm measuring success, and I'm evaluating the growth and functionality of my business. So this way, when I'm running a business, I need to meet I need to meet and understand the different aspects about business, its financial position, its growth, and so forth and so on. So considering this, we always need to have the growth, the success, the decision need to be managed by information. So I need to have what is my profit, what is my loss, what is my key performance sector, and what is my the key aspects which I should able to control. So this way, I'm able to analyze how the things are going to happen, how the things are going to progress, and by considering this, I'm able to ascertain and able to recognize my functioning of organization. So control, coordinate, cooperate, and manage the assets is helped by organization. So here the company's financial position is getting a booster or a support to the organization for making its decisions. So if I'm a owner of any company, accounting information is my backbone for operations. So for any doubts, I'll wait for 2 minutes. If you doubts, you can post in chat box. If no doubts, let's move further. Lenders. Lenders are basically the external people who are giving the money, who are assured that their money is protected in the company. So they are basically dealing, they are basically involved to get short term or long term gains by investing in assets or liabilities or function or sponsoring some activity or business. So their interest is to ensure that steady progress and growth is happening, and this steady progress of growth is as per their expectations. Because if they found there is a deviation in the expected route, they can take the corrective steps, they can take the objections, or they can take the decision about their investments. So, anyhow, they will be able to plan about their money in a business, and they can take a call how much to invest, where to invest, why to invest, and how to invest. The key information what they will access is a cash flow, the dividends, the interest paid by organization, and overall profitability ratio followed by the organization. If my expenditures are minimized and profitability is followed, then in that case, I need to analyze the productivity, I need to analyze the benefits, and so on. I'll wait for 1 minute. Please read the slide. Just read it. If any doubt, post in chat box. No doubts. So let's move on further. Now, the difference between lender and investor is lenders are more short term, whereas investors are comparatively long run. The investors are having no issue about risk, whereas lenders they have always concern about risk. Because when I'm lending a money to any organization, my interest is to get my returns. I'm not interested whether it's a high return or low return. But as an investor, when I'm giving the money, my amounts are larger. The risk profiles which are attached to that lending or giving money are more. So they have the parallel interest like lenders, but since the amounts are more, they are interested in risk taking more. So compared to lenders, the investors are risk takers and they will analyze the performance of organization on the basis of risk and return rewards. They will check whether the money given is done or no. So risk and return analysis, they required what is the profit, what is the composition of debt, how much is capital, and so forth and so on. So for this reason, they will be evaluating, analyzing the accounting information and its performance. Now, what the information is used by investors? They will talk about what is my sales. They will talk about what is my profitability. They will talk about what is my nature of investment. They will compare the information of similar other companies and then decide whether they will invest in my company or they will invest in other company. So if I compare the data required for lenders, it very limited because they are not in that business of risk taking and risk making. But if I go to investors, they are more interested about how I'm performing, what is the margin where I'm operating. So there they are analyzing the situation. They are checking, they are analyzing, and they are making a decision whether I go with the company A, company B, or C. Now let's move further for other investors. The creditors are those people who are supplying us the raw material, who are giving us the resources which we can use and do the production. So, in short, suppliers are those people who are analyzing the information, who are using the resources, and who are facilitating the benefits. So, when I'm supplying to somebody, I need to check that I'm having sufficient support for my resource. If I support that organization and later I found out that organization is not performing well, then in that case, my organization will not be able to recover the money and I am doing a blunder task. So what I can take a call that instead of just blindly supplying, evaluate the performance, analyze whether I'm doing good or bad. So they will just check the assurity about repayment of their supplies. Suppose I supply the goods and suddenly there is a war. So the person who has purchased the goods, he will might not pay me because what he will make a thought that if I have supplied the goods and I want to recover the money, if the war is started and I go to that particular country for asking money, in the war situation, the other person will dodge me. If I supply to suppose Mukesh Ambani and Anil Ambani, who will give my money back? I don't want to comment about solvency and their financial position. But in general, when I make a thought, then in that case, there is an analysis or evaluation that whether it's risky or it's non-risky. And based on that, I can take a call how to supply, where to supply, and what are my terms and conditions. If it is more risky and not surety about return money, then I'll not providing discounts. I'll just give him short-term credits. Okay, you have only 5 days or 10 days and pay me the money. If the person who is purchasing the goods or to whom you are supplying the goods, he is a trustworthy person and purchasing a large quantity, then I can offer him something extra over the regular purchases. So normally I can offer the different terms. I can offer the transportation. I can offer him liberal pricing and so on. Whereas if I'm supplying to government agencies, normally the supply to government agency is in particular shape, size, and formats. But here the cash conversion cycle is prolonging. So based on need, urgency, and cash terms, I will talk about the advances. I will talk about the decision about payment cycles and so on. So in short, depend on organization, depend on risk. When I'm supplying the goods, I can change my terms of trade and I can bargain out the same. So when I'm supplying any company, I'll talk about its working capital because that will help me to understand its cycle, its encashment of products. I will talk about its payment policy, its turnover, its cash flow, and its major input and output of expenses and income. So this way I can protect myself for any losses. Then there is a public at large who can be again the users of accounting information. So these people will use the accounting information for employment, for comparison, for research. for any public survey or any number to understand how the business growing so that they can take the reference of same data for formulating different policies, for training the people, for educating the people, or to run the controlling pattern of similar companies in other ways. So these are the certain users of accounting information. So we covered what is the scope and nature of financial statements. We talk about the users of accounting information. Anybody, any doubt? I'll wait of 1 minute. If any doubt, post in chat box. Any doubts?
No, sir.
No doubts. So we'll go further. Now, the we understood what is the scope. We understood who are the using accounting information. Now, we need to go and understand more in detail something called as accounting concepts and accounting conventions because these are the core essentials for any account writing practice because this will disclose how I'm maintaining the records and why. So let me share the same. Now, can anybody just write in chat box what is mean by convention? Anybody has the idea what is meaning of convention? Anybody? So let's move further. The accounting concepts means the principles or logics which are being applied, whereas accounting conventions are the parallel guidelines which are desired to be followed. So concepts are fundamental things which I should do it. If I want to start a bike, I should put it the key, make ignition on, make the starter, or just put the key. So these are basic things. But accounting convention talks about how I can run that bike, how I can push the throttle. So concepts are the fundamental things, and conventions are the guidelines to make the things work or operate in particular way. So in the accounting concepts are logical explanation of different thoughts, different units, or different statements, which forms the baseline for writing account practices. Whereas accounting conventions are instructions how to read, how to analyze, and how to understand these all accounting concepts better. So I think there's only 1 minute is left. So we'll stop for the day. Today we discuss about scope and application of financial accounts. Sorry, financial statements. Financial statement is a summarized presentation and analysis of financial position of company. It can be trading account, it can be balance sheet, it can be income and expenditure account, or it can be only a mere statement expressing cash flow or inventory. There are multiple users of accounting information, and according to them, the information changes. One is internal user, and second is external user. The most of the internal users they refer the information for decision making, for comparison, and for demanding their performance right. The external users, they use the accounting information for safeguarding their interest, their investment, and their dealing with the organization. The information access for internal users is mostly critical and personalized, whereas information access to the external users are strictly certified and not in depth as compared to the internal users. The example of internal users are managers, employees, trade unions, and so forth. The major example of outside users is public, government, investors, lenders, and so on. So we'll stop for the day. At 8 p.m., we'll meet for the international finance. Meantime, please join the other session. Thank you once again. Wish you a wonderful time.
Thank you.